Hello everyone. Today we discuss about management accounting, scope and nature. So first of all we discuss about meaning of management accounting. It is the accounting which provides the necessary information to the management for discharging its functions of planning, organizing, directing and controlling also. The American Accounting Association defines it as the application of appropriate techniques and concepts in processing historical and projected economic data of an entity to assist management in establishing plans for reasonable economic objectives and in the making of rational decisions with a view towards achieving these objectives. Now, functions of management accounting. Management accounting helps in the performance of the functions of planning, organizing, directing, and controlling in the following ways. First, provides data, serves as a vital source of data for management planning. Second, modifies data. The accounting data is properly compiled and classified for purchase figures of different months may be classified product wise, supplier wise, and territory wise. The third one, analysis and interprets data. The accounting data is analyzed meaningfully for effective planning and decision making also. This done through ratio analysis, trend, projections, etc. Now the functions of management accounting serves as a means of communication. It provides a means of communicating management plans upwards, downwards, and outwards through the organization. Facilitates control, helps in translating objectives into goals which are to be attained in a timely and effective manner. The attainment is made possible through budgetary control and standard costing, which are an integral part of management accounting. Uses qualitative information. It is not restricted to the use of financial data. It uses qualitative information also which can be obtained from surveys, statistical complications, engineering records, etc. Now, the scope of management accounting. The scope of management accounting is vast and includes nearly all aspects of business operation, as you all know. Financial accounting. Without a properly designed financial accounting system, management cannot obtain full control of operations. Cost accounting, standard costing, marginal costing, opportunity cost, analysis, and other cost techniques play a useful role in operation and control. Budgetary control involves framing budgets, comparisons of actual with budgeted performance, computing variance, finding their causes, etc. Now, the scope of management accounting. Inventory control involves inventory control from the time of acquisition till the time of final disposal. Statistical method, graphs, charts, and other statistical methods make the information presented more impressive and intangible or intelligence intelligible. Interim reporting includes preparations of monthly, quarterly, half-yearly statements and reports. Taxation includes computations of income in accordance with tax laws, filing of returns, and making tax payments. Internal audit development of suitable internal audit systems for internal control. Now, who is the management accountant? Management accountant is the channel through which the information provided by management accounting flows effectively and efficiently to the management. Functions of the management accountant. First, planning. He has to establish, control, and administer an adequate plan for the control of operations. Second, controlling. Compare actual performance with operating plans and standards and to interpret and report the results to all levels of management and the owners. Coordinating. He consults and coordinates with all segments of management responsible for policy or action. Financial accounting versus management accounting, designed to supply information to external parties like shareholders, creditors, etc., in the form of balance sheet and profit and loss account. On the other hand, management accounting designed for providing accounting information for internal use by the management. Financial accounting portrays the position of the business as a whole, and management accounting directs its attention to the various division, departments, etc., and reports their performance. Financial accounting, it is a post-mortem analysis of past activity and uses monetary record of past events. And management accounting, it is accounting for the future. It supplies data for present and future are duly analyzed based on which decision making is done. Financial accounting versus management accounting. Only such economics events are considered which can be described in monetary terms. And management accounting, non-monetary events are also considered technical innovations, changes in the value of money, etc. Financial accounting information is usually provided yearly. Of course, in some cases it may be half yearly or quarterly. And management accounting information is provided more frequently and at shorter interval as per management required. Financial accounting based on financial data and therefore more objective in nature, and management accounting based on judgment and therefore more subjective in nature. Now, utility of management accounting: planning, formulation of policies, setting up of goals, and initiating necessary programs for attainment of the goals is done by making available the relevant data and analyzing it for decision making. Second, controlling involves evaluations of actual performance and taking remedial action in case of variance through budgetary control, standard costing, etc. Coordinating involves interlinking of different divisions of the enterprise in a way as to achieve the objectives of the organization as a whole. Tools are departmental budgets and reports also. Organizing the whole organization is divided into suitable profit or cost centers. Internal control and internal audit for each of these centers helps in organizing and establishing a sound business structure. Motivating periodical department or periodical departmental profit and loss accounts, budgetary reports, etc., help in ascertaining which employee to reward and which to penalize. Communication involves transmission of data, results, etc., to insiders as well as outsiders. This function is facilitated by developing a suitable system of reporting which highlights the relevant facts. Tools of management accounting. Management accounting uses various tools to discharge its duty towards management. The important tools are financial statements analysis, funds flow analysis, cash flow analysis, costing techniques including marginal, differential, standard, and opportunity costing, budgetary control, management reporting. Now that's the end of the video, my friends. In the next chapter, I will discuss about cost accounting, meaning and scope. Thanks again for watching my videos. And if you like my blogs, please subscribe and share my channel. Thanks again.